Okay, so for 15.3, like I said, we need the sheet from section 1.
Didn't you say this book on was the chapter 16?
Yeah, 16. All right, so number 1. Prepare the statement for stockholders' equity for the current year, January 1st, from Interstate Tires. Remember, that's our work together company, was Interstate Tires. They issued 100,000 shares, $1 a share. And then during the year, they put out another 10,000 shares. So then save the work. We're going to use some of this for section 4 too. So I'm just going to turn the page backwards to the example in the book. So we're going to start off, the header of the statement. Got to fill it out just like the one in the book. So the name of the company is Interstate Tires. And it's the statement of stockholders' equity. And year ended December 31st, 2018. We'll put 2018 since we just got done with that one. For a year ended December 31st, 2018. Easiest part. Okay, so looking at the example on the top line, just going to write capital stock. Try to zoom this out a little bit. So that's just the title of this section, and in the description of the scenario, the par value is $1 per share. So here where it says $50 par value, we're just going to put $1 par value. Like that. And then the next line is going to have the date, January 1st, 2018, because this would have been at the beginning of the year to show what was on hand. $2018. And here they have the amount of shares that are issued out, and for Interstate Tires it was 100,000. I ran out of room because I write too big. 100,000 shares issued. So then what they do in the book, you just take your shares, multiply it by your par value, because that's the value per share. So in our case, 100,000 shares at $1 a share, that's $100,000. Then our next line, issued during the current year for Interstate Tires, it was 10,000 shares. So we'll write 10,000 shares on here and then multiply the 10,000 by the $1. So we'll have another $10,000 right here. Issued during current year. $10,000 shares times $1. Got $10,000. So now then our last line, this is going to be the balance for all the shares that are out and the value December 31st for the year ended 2018. And we'll just have our total monetary value in the third column. Balance. So our balance, we issued 110,000 shares for the whole year. We'll draw a line underneath that in the middle column. And that leaves us with a total value of $100 in shares. That's where we're at so far. Okay, so now we're going to start a new section underneath for our retained earnings. So we'll start a new section, retained earnings. So we've got our next line down, and if you're looking at the book, balance, January 1, 2018. So now the amount that we're going to get for our retained earnings, that's going to go in this middle column, is we're going to get this from our worksheet that we used in section 1. So, you know, looking down the lines on our worksheet. On this one, on the first page, it's at the very bottom, and in the instructions. So back to the instructions. You know, in step 2, you write the beginning balance of retained earnings from the balance sheet credit column. So going back to the worksheet, you go down and got retained earnings here at the bottom. Right corner where it says, got our balance sheet column. Here in the credit. So basically getting our retained earnings, and it's labeled, so there's takes the guesswork out of it. Retained earnings $46,599.48. So that goes on the line that says balance January 1st. $46,599. $5.99.48. Okay, so then underneath this, like it says in the book, now we've got our net income after federal taxes, and that's going to go in our first column, and then we're going to have our dividends in our first column too. So underneath the balance net income, after federal tax, and we can just get this from a couple places. You can get it from your, or you can get it right from the worksheet. So remember, at the very bottom, the last line, net income after federal taxes, $62,907.35. So that's going to go in the first column here. $62,907.35. So that goes in our first column. And then the next line underneath that, less our dividends declared during 2018. So that means we're going to get our dividends. We're going to subtract the dividends from the net income. So less dividends declared during 2018. And that amount, that's also going to come from our worksheet. So front page, back page, where it was the very top one on the second page of the worksheet. Got our dividends. So here's our balance for dividends for the end of the year. So $8,800 were the dividends that were declared during the year. So we're going to put that in that first column. 8,800. So then our next line down, net increase during 2018. So on this part, so we've got our net income after federal taxes, then less the dividends. So that means the dividends are going to be subtracted. And that's going to be our amount for our net increase during the year. And it's going to go in this column right here. So we'll take $62,907.35 minus 8,800. And that gives us a total of, that gives us $54,107.35. So I'll leave that there for a second, so in case you need to get caught up. So that goes in that middle column. So now what we're going to do is we're going to add these up. So I'm just going to draw another line under the 54,000. Then that line's going to become our balance at the end of the year. So balance at December 31st, 2018. So what we're going to do, the balance at the end of the year, the balance at the beginning of the current year, or year that just ended, the balance at the beginning of this year, and then we're adding in our net income and basically subtracted out the dividends that were paid out during the year. So we're going to add these two amounts together for our answer for our balance at the end of the year of 2018. So let's add the 46,599 to the 54. So that gives us $100,706.83. So that leaves us with our last line. Total stockholders' equity. Then we're just going to add up the value of the stock plus the earnings for the year. And that's going to be the total amount of the stockholders' equity, or how much value the stockholders own in the company. Total. So I was going to add the 110,000 to the 100,000. So this will be 210,706. I wrote my numbers backwards here. And 83 cents. I just added these two up, so it comes to 210,706 and 83 cents. Yeah, I know it's hard to see, especially when I messed up writing the 83. I wrote 38 instead, and using pens so it'll show up better. But the problem with that is then it's hard to change mistakes. So that's the end. So we just like everything else, when we get to the total end, just draw double lines underneath, so no more can be added to it. And that is statement of stockholders' equity.